Hey everyone, Mike Clark here. I have Tom Biggs with Rickhoff Business and Balance. Tom's been a CPA for 18 years, and he's been with Kurt Rickhoff's firm, Business and Balance, for about 14 years. One thing that we constantly see is an individual who's done an amazing job in saving over a lifetime, Tom, and they retire at, let's say, 62, 65. Maybe they have a pension. At some point, they file for Social Security, and we certainly help clients with the math to help them on when they should file. But they have a large IRA, and they don't need it. They don't need any money from their IRA. But what they might not recognize is that when they do have required minimum distributions, it can push them up into a higher tax bracket, really for the rest of their life. And again, IRMAA, IRMAA, is something that you need to be cognizant of, and that is certain levels, which we'll share with you at another time, that when your income exceeds that level, your Medicare premiums actually go up. So that time between retirement and your required minimum distributions, we commonly call that kind of the sweet spot, where we work with someone like Tom to analyze whether or not it makes sense to convert a small portion of their IRA or a large portion on an annual basis, give them a little bit of a margin of error, so that they maybe don't bump up into another tax bracket or so forth. Is that something that you see with your clients?
Yeah, so this goes right back to a point we've already made a couple times during this conversation. You need to be looking at your tax situation across your entire life. Not now, not just later, but across the whole time. And the sweet spot Mike's referencing is that time between you're going to actually take that RMD and the time when you actually decide to retire.
Yeah.
And what you can do is your income may be lower because you're not taking your required minimum distribution. You're essentially saying you are, but you're converting it to a Roth.
Yeah.
And at a smaller dollar amount, keeping your total tax rate down during that sweet spot.
Yeah.
Versus when it'd be higher when you distribute it, and then you can distribute money upon retirement from that Roth IRA that you converted it to, and not pay tax when you're required to take some of that money, maybe contributed to your 401k or your simple IRA.
100%. That's great information. Thanks, Tom.
Yep.
So one quick thing is, as always, nothing that I or Tom has discussed today is either investment advice or tax advice, right? We don't know anything about you and your situation. If you have any questions, concerns, thoughts, reach out to us. My office is, our number here is 618-607-4101. You can reach me at mclark@clarkwellpartners.com. And Tom can be reached at 618-806-6551. And his email is TOMB@rickhoff.com. Thanks, and have a great day.